Hello everyone, welcome to ShailajaIAS. Welcome to the PYQ Decoder course. I am Subhash. So today we are continuing with the economy class, Economy PYQ Decoder class 3. Chalo, we'll begin. Chalo. So important PYQ themes we are seeing here. The next important pillar, the next important macro theme, which is monetary policy, banking policies and money market. We'll see here with respect to monetary policy and banking, RBI, mainly banking with respect to Reserve Bank of India and its function with respect to money market also. We'll see which are the questions and areas where questions have come. Those areas will become very important. See, RBI as a whole becomes very important and its functions become very important. It functions with respect to monetary policy, economic development, as a lender of last resort, forex reserve. All this becomes very, very important, and RBI as a whole is a important theme where 2 to 3 questions come, at least 2 questions will come every year in economy. We'll see sources of RBI income. RBI operations is a main theme. 2025 has asked, which of the following are the sources of the income for the Reserve Bank of India? Buying and selling government bonds. Yes. Repo rate, right? Reverse repo. These are nothing but interest rates at which RBI will sell and buy the government bonds, and the difference of interest rates is the income earned. We can't discuss all the concepts here, but you should know it before, and this is not a class where you are learning the concepts here. You should be able to understand which are the important areas in the last leg of prelims. So difference between the interest earned is the income you got. Buying and selling government bonds, you will receive income from the difference of interest. Next, buying and selling foreign currency. There also, with respect to exchange rate, if you have already said dollar reserves, say today it is 87 rupees, tomorrow it is 89, or when you bought it was 87, now it is 89. The 2 rupee difference is your profit. Yes, 2 statement also, second statement also is correct. Pension fund management. Does RBI regulates and manages pension? You have organization called PFRDA. You have organization called PFRDA. Pension Fund Regulatory Authority, PFRDA. So, pension fund management is not done by RBI. Insurance is not done by RBI. Capital market is not managed by RBI. SEBI is there. IRDA is there. Right? Lending to private companies. See, this is one of the regular trap kept by UPSC. Does NABARD give loan directly to farmers? No. It will give through banks. Does, okay? SIDB give loan to companies directly? No. Those are all refinancing bank. They will give loan through bank, regional banks, RRBs, okay, cooperative banks. Through that they will give loans. They won't directly involve in operations like this to lend to private companies. Here also, RBI will not directly lend to the private companies. It will lend to the banks, and then from banks it will go to the private companies. Next, printing and distribution of currency notes. Here, no, this is a very tricky. Printing is a cost to RBI, and distribution also is a cost. However, it earns a money through seigniorage. That means, for example, say 500 rupee note. To print it, it doesn't cost 500 rupees, right? It will cost somewhere 10-15 rupees. It might cost for RBI. The difference between 15 rupees and 500 rupees, the 485 rupees, which is acting as seniorage, acts as a income for the RBI under this one, printing and distribution of currency notes for this statement. So statement 1 is correct, 2 is correct, 5 is correct. Statement 3 and 4 are not the sources of income for RBI. So what is the answer here? Here answer is 1, 2 and 5. So 1, 2 and 5, D. Pension fund management, RBI doesn't do. Lending to private companies, private players, it will do through banks. RBI will not directly do it, and income is not earned through lending to private companies. Clear? We'll see next question. RTGS versus NEFT settlement. Okay, all the very important financial instruments are very important. It might be digital, like DPIs, like UPI, etc., and banking. If any new things are coming in NBFCs, okay, payment banks, all this becomes very important. Any new current affairs in news with respect to payment systems will become very important. Here he is asking about RTGS, okay, and NEFT. National Electronic Transfer. This is real-time gross settlement, RTGS. We'll see. Consider the following statements in respect to RTGS and NEFT. In RTGS, settlement time is instantaneous. Yes, real-time gross settlement. In real time it is happening, correct? Well, in case of NEFT, it takes some times. Yes, NEFT happens in batches. It's electronic fund transfer. All the NEFT transaction that has to happen, it is batched and it will happen in batches. Only if you have read the concepts, if you know, and at least full form if you know, you'll be able to answer. Real-time gross settlement, RTGS. So it will happen in real time instantaneously. NEFT will take some time. Correct. In RTGS, the customer is charged for inward transaction. That is not the case of NEFT. Under guidelines of RBI, for inward transaction inside the bank, for the inward transaction, our customer is not charged both in RTGS and NEFT as per RBI guidelines. However, for outward transaction, no. Customer might be charged based on the bank rules and policies. But for the inward transaction, customer should not be charged as per RBI regulations. Next, operating hours for RTGS are restricted on certain days, while this is not true for NEFT. The recent, okay, it was in news, current affairs, in 2024-2023, operating hours of our RTGS also have been made 24/7. Except holidays, right? Banking holidays and festival holidays, RTGS and NEFT are allowed 24/7. So here statement 1 is only right and statement 2 and 3 are wrong. You can't use any logic. You should know at least the full form, and you should know, very important with respect to instruments, financial instruments of settling money or transferring money. SWIFT also was in news in 23. Because of Ukraine-Russia war, that question was asked. RTGS and NEFT changes were brought every next year. The very next year, questions are coming. So every year, with respect to financial instruments, one question is every year appearing, coming again and again. Next, collateral obligation with respect to money market question is coming. With reference to Indian economy, collateral borrowing and lending obligation, CBLO, collateral borrowing and lending obligations are the instruments of bond market, forex market, money market, stock market. Okay, what is the option here? What is the answer here? Money market. Okay, who controls money market? RBI. Collateral borrowing and lending obligation is a short-term loan given to whom? Banks, mutual fund houses, okay, some of companies. If they require short-term, say 1 week or 14 days, okay, short-term borrowing and lending. Typically overnight or for 7 days to 14 days. If they have mismatch, okay, short-term money is required, then CBLO is given. CBLO is money market instrument and it is under RBI. You should know which are the instruments of money market and which are the instruments of stock or capital market. Questions are coming every year with respect to which are the instruments of capital market and which are the instruments of money market. Okay, government securities will act as collateral. So collateral, borrowing and lending obligations, CBLO. Next, foreign bank regulation. Okay, banking regulation is a major theme, major micro theme. Which are the important committees in banking regulation? Study that. Okay, committees. And what are the problems in banking and reforms in banking sector? All this will be very, very important, these themes. We'll see with reference to foreign bank regulation, question has been asked. With reference to the rules imposed by the RBI while treating foreign banks. There is no minimum capital requirement for wholly owned banking subsidiaries in India. That is, foreign bank has a wholly owned banking subsidiary. One financial entity, will there be no capital requirement? For small finance bank only, you will have SFB only, you will have capital requirement. So, there is no minimum capital requirement will be wrong. See? Logically also it doesn't make sense, and if it is a bank, there should be minimum capital requirement for the bank to be established in India. It is 500 crores here. As per RBI guidelines, it is 500 crores. It might be keep changing. That's why they'll not quote exact number, but see, there is no minimum capital requirement. Capital is the base for any bank to operate, right? So statement 1 is wrong. For wholly owned banking subsidiaries in India, at least 50% of the board members should be Indian national. This is a RBI rule that if foreign bank is coming to India and its subsidiary is in India, at least 50% should be, board members should be Indian national. So statement 2 is right and statement 1 is wrong. Here answer is option B. RBI mandates a minimum capital of 500 crores. And statement 2 is correct as per governance norms under RBI with respect to foreign bank regulation. Clear? Now we'll see with respect to central bank digital currency. So digital rupee, which was in news. See the questions. It's a sovereign currency issued by RBI. Correct. It appears as a liability on RBI's balance sheet. See, once you issued rupee, e-rupee, it will lose its value due to inflation normally. So when RBI gave, okay, it will be 1 rupee. But when it gets back, it might not be 1 rupee, it might be 90 paise. Okay, that's why it acts as a liability in the balance sheet. This you should have clarity. What is liability? What is asset? In previous classes also I was telling, all this should be, accounting principles should be no, you should have proper clarity in economy. Questions and traps are set in accounting principle. Yes, it appears as a liability. It is insured against inflation by its design. See, this and this are contradicting. If it is insured, it will not reduce its value due to inflation and it will not act as a liability. Therefore, it is not insured against inflation by its design. It is freely convertible against commercial bank money and cash. Obviously, the cash, the physical cash and the commercial bank money, it is freely convertible. That is the benefit of digital currency, where it can be converted into physical money and it can be transacted in commercial and all other banks. So, answer is except 3 pairs or 1, 2, 4. Right, central bank digital currency. Clear? Next we'll see interest rates. After COVID, where banks had reduced their interest rates almost near to zero, post-pandemic interest rates were increased. See, bond yields, interest rates. All these are interlinked topic. Inflation. Okay, all these are interlinked topic. You need to have clarity with respect to this in monetary policy and fiscal policy. Statement 1. Many central banks worldwide had carried out interest rates hike. During Corona, to inject liquidity and to increase spending, what they did, government, they reduced the interest rates. However, inflation also shot up. Inflation shot up. Now to control inflation, what many central bank, okay, US Fed, India's RBI, what it did, it increased the interest rate. When it increases the interest rates, then loans will become costlier. When loans will become costlier, borrowing will be reduced. Inflation also will be under check. Inflation will come under check. Central banks assume they can counteract rising prices via monetary policies. What is inflation? Rising general prices in goods and services. Obviously, that is the assumption that central bank assumptions that countering rising prices via monetary policy, that is rising interest rates, and if there is deflationary thing is going on, then they reduce the interest rate to inject liquidity and to reduce, okay, deflation and to make sure expenditure is going on. So central bank, say RBI in India or Federal Bank in USA, assumes they can counteract and counter rising prices or suddenly fall in prices via monetary policy. That is the reason which explains statement 1 why central bank increased the interest rate to ensure inflation is in check and reduce the rising prices. So option E. Both 1 and 2 are correct, and correct statement 2 explains statement 1 asked in 2023. Clear? 2023. One more, same on RBI functions. See, RBI is the core theme asked every year, 2-3 questions. What is RBI sterilization? Which of the following with respect to Reserve Bank of India is considered as part of sterilization? Sterilization is conducting open market operation, oversight of payment system, debt and cash management for government, regulating NBFC functions. Here, it was in news that year it is with respect to open market operation. What would happen when it was 2023 global forex? When RBI used to buy, it used to pay rupee cash and buy, say for example, dollar or gold. Then cash would be very much high in the system. In system, cash liquidity would be more. Liquidity would be more. To suck that liquidity under open market operation, it used to sell government bonds. Sell government bonds and suck the rupee cash. This was called sterilization of RBI. Sterilization of RBI under open market operation. So conducting OMO. Sterilization involves selling government securities via OMO to mop up excess liquidity inject into the economy. When RBI buys foreign currency or dollar, gold, anything, it is paying in cash. So cash is going in the system. To suck that cash, RBI what it is doing? It is selling government bonds. Clear? Next, again CBDC and SWIFT payment system has been asked in 2023, which was in news due to Ukraine-Russia war. We'll see. With respect to central bank digital currency, question has been asked in 24. SWIFT system question had been asked in 23, and in 25 you already know NEFT and RTGS question has been asked. It is possible to make payments in digital currency without using SWIFT payment. Yes. In CBDC, it is a directly peer-to-peer backed by RBI. You don't need to have SWIFT payment. And for example, you have now UPI also. Here, you can. See, it's all about possibility. Can. It is not must. Possible. Possibility. Can make payments in digital currency without using SWIFT system. There is no compulsory mandate. Can. Yes, one of the positive benefits is it can be done peer-to-peer. Statement 1 therefore will be correct. Digital currency can be distributed with conditions like a time frame for spending. Obviously, e-coupons, right? Digital currency also can be distributed with time frame. You must use in 6 months, 1 year. That can be made, correct? So here what will be the answer? 2 pairs or both 1 and 2. Easy. Normally in economy, technology, science and tech questions can be possibility with respect to new technology, new initiatives will be right. Clear? Both 1 and 2. Next. This is a core economic, okay, NEER versus rate, economic concepts with respect to exchange rate. GDP, GNP with like that, the exchange rate, nominal effective exchange rate and real effective exchange rate. Question had come in 2022. Increase in NEER indicates appreciation of rupee. For that, we need to have understanding of nominal effective exchange rate and real effective exchange rate. Forget real nominal. What is exchange rate? Here, with respect to rupee, other currencies, say dollar, pound, yen, how it is? The exchange rate is behaving with respect to rupee. Effective exchange rate is the basket of foreign currencies. How rupee exchange is behaving with respect to basket of foreign currencies. Nominal effective exchange rate. Okay. Nominal is for today's rate. Real, the rate will be stable. Stabilized price. Okay, price is stable here. In the year, the price is nominal. That is today's price. It is taken, not a stable price. We'll see how it is linked to appreciation and depreciation of rupee. Okay, we'll see one by one. Increase in NEER indicates appreciation of rupee. That is, say, increase in NEER, nominal effective exchange rate. NEER is increasing. Exchange rate, rupee is increasing. Okay. What is happening? It is strengthening. Rupee is strengthening with respect to dollar, pound, yen. That is for example, if $1 90 rupees was the case, if $1 80 rupees we are getting, then rupee is strengthening or appreciation of rupee is happening. Increase in NEER means rupee value is increasing. For $1, the amount of rupee is reducing ulta. Appreciation of rupee is happening when NEER increases. Correct? This you need to have clarity of the fundamentals. Then only you can answer. Increase in REER indicates improved competitiveness. Is it? For example, say $1 was 90 rupees. REER also same thing, but stabilized price. Okay, real effective nominal will not get into here. $1 REER increase and say 80 rupees it was. Then trade competitiveness will increase or it will decrease. Whatever, for example, they used to buy at 90 rupees, now they will get only 80 rupees. They have to pay extra point some dollar to get 90 rupees and buy products in India. So, increase in REER will not necessarily increase trade competitiveness for India. Higher domestic inflation causes increasing divergence between NEER and REER. That is correct. If inflation is more, nominal and real, right? This divergence will keep on increasing. With respect to if nominal effective exchange rate and real effective exchange rate, this increasing inflation causes, okay, more divergence. That is correct. What happens here? Trade competitiveness might not increase but might reduce when there is an increase in REER. So statement 1 and statement 3 are correct, which is option C. Increase in REER means domestic goods are more expensive, which is less competitive. Therefore wrong. Statement is 3 is true because inflation differential between REER and NEER, it goes on increasing. This term, okay, NEER, REER, GDP, GNP, NDP, NNP, hedging, all this will be very important. Next, RBI again, strategies. monetary interventions. Question has been coming from monetary intervention. If inflation is high, RBI likely buys security. Inflation is high means what? Money supply is high. Money supply is high, then RBI will likely buy securities. If it buys securities, what will happen? RBI will inject money and it will take the security. Will inflation increase or reduces if money is going again to the system? Tell me. If inflation is high, RBI likely buys security or sell securities. In previous slide, we saw OMO where to suck the excess money, it is selling securities and taking the money. If inflation is high, it will take the money. If to take the money, it will not buy, it will sell securities. So statement 1 is wrong. Clear? Clear understanding you should have. If rupee depreciates, RBI likely sells dollar. Yes, to strengthen the rupee, what it will do? It will sell dollar. To strengthen rupee, it will sell dollar. Okay, that means rupee in the market is reducing because they are selling dollar RBI and buying rupee. So rupee will at least stabilize. If rupee is depreciating, RBI will sell dollar or forex. That is happening now when Iran war is going on, right? Rupee is depreciating. So for that, what it is doing? It is selling dollar and stabilizing the rupee. If US EU interest rates fall, RBI likely buys dollar. Okay, RBI buys dollar when foreign rates fall to prevent excessive rupee appreciation from capital inflows. Why? If US EU interest rates fall, RBI will buy dollar. Why? Means when foreign rates fall to prevent suddenly excessive rupee appreciation, okay, from capital inflows, what it will do? It will buy dollar. Statement 2 is right, statement 3 is right, but statement 1 is not right because under inflation to suck money supply it has to, okay, take the money and sell securities. So statement 2 and 3, 2 pairs are right here. It was asked in 22 and first statement is wrong. Clear? We'll go to next question. Again with respect to price stability, question has been asked. In India, which one of the following is responsible for maintaining price stability by controlling inflation? Right, which has got the mandate here? Easy, Reserve Bank of India. Monetary Policy Committee has been formed, right? Under that 4% plus or minus 2%. While ensuring economic development is happening, price stability also is there and inflation is kept under 4 plus or minus 2% check. Clear? Easy question. Next, governor and legal power. I think we discussed this in RBI, in polity. Governor of RBI is appointed by central government, right? Provisions in constitution give government rights to issue direction to RBI. No. Governor draws power from RBI. Already act is there. Constitution will not provide. These two are contradictory. So statement 2 is wrong, we know. Either 2 pair or we know 1 and 3 is right. 1 and 3, option C. Clear, guys? See, what is important here is the themes where question is coming again and again. We saw Reserve Bank, we saw monetary policy, we saw the interlinking financial instrument. Now we'll see with respect to money supply, money multiplier, okay, all this we'll see. The money multiplier in an economy increases with which of the following? Increase in CRR, increase in SLR, cash reserve ratio, okay, statutory liquidity ratio, increase in banking habit of people, increase in population. If you increase CRR, SLR, no, money in the supply will reduce. So that will not happen. You should reduce CRR and SLR for increasing in more money supply and money to multiply. Increasing banking habit of people, yes. Increase in population? Not necessarily. When banking habits increases, okay, more money comes to the system and remains in the system because deposits are more than people keeping money idly in the home or cash in the home, allowing banks to lend. When you lend more, money will increase. Banking activities will happen when you lend more. New products are built, you are buying it again, loan is repaid, the interest differential money is getting multiplied and added in the Indian economy. So increasing banking habit of the people was the answer asked in 2021. Clear? The concepts have been asked. RBI's role as lender of last resort. RBI is key theme always. What is lender of last resort? Lending to industry bodies, failing to borrow elsewhere. Will it give to industry bodies? See the trap again. Private bodies, RBI won't deal with. It will deal with directly with banks, NBFCs, providing liquidity to banks having temporary crisis. Correct. Lending to governments to finance budget deficit. But that does not come under lender of last resort. Is it last resort? No. This under FRBM Act, but not as a last resort to deficit. For the government deficit to ensure it can finance budget deficit, RBI will issue government security bonds. But that is not as lender of last resort. Here only statement 2. Providing liquidity to banks that are facing temporary money crisis. So option 2 is the answer here. Asked in again 2021. Clear? Next, with respect to money supply, again the question was asked. If you withdraw 1 lakh in cash from your demand deposit account, the immediate effect on aggregate money supply will be. What is broad money or aggregate money? It is M3. What is reserve money? You need to know M1, M2, M3, M4, all that money you need to know. What is M3? Both money with public, plus deposits, right? Deposits in post office, bank, all that, but public and deposit. If 1000 is removed from DD, demand deposit, it will come to public circulation. The immediate effect on the aggregate money supply will be nothing. Money has shifted from year to year. So immediate effect will be 0 to leave it unchanged. Once you understood money supply, money multiplier, all the reserve ratios, once you have understood concepts, question can be solved very easily. Next, again with respect to debt instrument, question has been asked. These are money market instruments, question has been asked. Who will control money market? Again RBI. Commercial paper is unsecured. Is it correct? Yes. Certificate of deposit is long term. In money market, no, it is all less than 1 year, which is short term. So statement 2 is wrong. Call money is for interbank transaction. Correct. If you have read it, you will know. Zero coupon bonds are interest bearing. Zero coupon bonds means zero interest rate. When they issue only, they will take this interest rate and they'll give the loan. So statement 4 is not interest bearing. Zero coupon bond, zero interest bonds. So 1 and 3 are right, 2 and 4 are wrong. Answer is 2 pairs, 1 and 3. CDs are short term. Zero coupon bonds are issued at a discount and do not bear regular interest payments. T-bills are an example for, treasury bills are example for zero coupon bonds. Next, again monetary policy, question has been asked in 2020. Expansionist strategy on that, based on that question has been asked. We'll see. If RBI decides to adopt expansionary policy, which will it not do? Which would it not do? Which it will not do. Which it will do if it wants to adopt expansionary policies. Cut SLR, yes. Reduce statutory liquidity ratio, so money supply will be more in the system. Cut bank and repo rate, yes. To adopt expansionary policy, increasing marginal standing facility rate, no. He has to reduce, but he has asked which it would not do. It would not do is this one, right? Which it would do is 1 and 3. Which it would not do, he has asked. Be very careful. Option 2. 2 only. Clear? Understood? So, I know many questions has been come from this topic and this theme, which will be very important in UPSC also in 2026, where 2 to 3 questions come. Very, very crucial topic. So all the themes which you saw, all the key topics which you saw, thoroughly revise it and understand and interlinks the topic. So in next class, we'll be coming with the next theme. Till then, take care. See you.